I'm Marc Lackritz, President and CEO of the SIFMA, and I'm going to discuss this morning the impact of the credit crunch on the economy and the markets, as well as investors and homeowners. In the late 1990s and the last 5 or 6 years, we've had a dramatic expansion of credit availability throughout the economy. It's been the result of a growing economy, low interest rates, innovations in the financial markets which have made credit available to lots of individuals and corporations that hadn't had access to credit before, and has helped to spur economic growth, strong economic growth, and greater productivity. As a result of widespread availability of credit and lower interest rates, borrowers of all kinds have benefited. Homeowners who've gotten mortgages that they previously didn't qualify for, middle income and lower income families were able to buy a home for the first time. Small business and corporations were able to borrow in the marketplace to finance their expansion and their growth. Governments, schools, hospitals, and public authorities to build roads and bridges were able to borrow much more effectively and cheaply as a result of the widespread availability of credit. About a year ago, all of a sudden, with housing prices leveling off and even declining, and introductory mortgage rates being reset, and interest rates starting to rise, we had a significant increase in the default rate among subprime mortgages. That was unexpected, and what happened as increasing defaults occurred in the subprime market, the fear that induced in the markets for subprime mortgages migrated and was contagious in other credit markets. Risk had become very cheap, and as a result, risk pricing all of a sudden turned dramatically, and risk became much more expensive, and a market that had overshot all of a sudden overcorrected as well. When the market corrected, that was not unexpected. Markets go up and markets go down. But the severity of this correction surprised a lot of people, because while the market overshot by making so much credit available, it has now overreacted in the other direction and has caused markets to dry up that previously were funding mortgages and corporate credit and the expansion of credit in the economy. When markets overcorrect, as they have in this instance, the role of the central bank is to help markets function normally as quickly as possible. Here, the central bank has stepped in and through a variety of measures has put more liquidity back into the system in an effort to help markets come back to normalcy as soon as possible. The practical effects of an overcorrection like this are very tangible for real people. People and families wanting to buy homes will find it harder and harder to get mortgages. People that want to start businesses will find it harder to get loans. Businesses that want to expand and innovate will find it harder to get credit. And the net result is to slow our economic growth somewhat, although we're not sure how much, since economic growth worldwide is still very strong, and this credit market that we're talking about right now is just in the United States. This overcorrection of the marketplace has created some real problems in this short run. We need to be sensitive to these problems, but we also know that we need some patience so that markets come back to functioning normally as they have. In the long run, we're going to be better off because of these innovations in the financial marketplace that make credit more widely available to individuals and companies who otherwise hadn't been able to get access to credit. Thank you very much.